Good morning, everyone. It is Monday, July 8th. Kind of an interesting week as I believe Butch is off for the entire week and everyone's back from the 4th of July, which was kind of one of those holidays where you still kind of had your eye on the markets because they were open. The Globex session, the currencies were open. Kind of a weird day with the 4th of July being on a Thursday. And then some people, taking this into a 5-day holiday with some of Wednesday, Thursday, and then keeping their eye on the jobs report. Friday, as the market would just sneakily just rallied, all of a sudden you just see these little bursts up, and then it's sideways and then bursts up. And it was kind of a, next thing you know, we were all over the board from the downside to the upside and finally finished the week strong. How strong did we finish the week? Well, looking in the S&Ps, I'm not sure, how many people recall me talking about the AD lines last week being strong as the market was right into this area here? I think, Guido, you commented yes, and Steve Marks, yes. And so even though the market came back through that 1620 handle area, Ruth, right, and we saw that what I call artificial breakdown to like 15 overnight in the futures was more like 1594. It really didn't do any destruction to the advanced decline, meaning more stocks in the cash market still maintained positive closings. So the strength is in, as we come into now, the cash market. One thing that you guys may have heard me mention is that we've really been paying attention to a lot of the cash market because the futures are dictated by cash. We all know that, right? And so I think the room in the past, we've focused, when Apple was the leadership of the market, we focused on Apple. And as most of you are aware, Apple has lost its leadership in the NASDAQ for, I'd have to say, 6 to 9 months. So if Apple did start to rally back into the 450, 500 range, it would take over from a percentage capitalization effect on the NASDAQ 100. But as we take a look at the, and that's why we do watch these advanced decline levels, because it's due to the fact that a lot of the stock indices that we trade are capitalized weighted. A few stocks carry a lot of weight to the value of the S&Ps. When you start to see the majority of stocks start to break out, okay, and they start to break out above old level highs. I mean, take a look at this. So when we were, and I'll just get this window popped open for you so you can see dates and times, and then we'll go through our scans together. All right, so on this date here, June 18th, notice the AD lines as I'm highlighting here. So we had a significant higher high in price on June 18th, but look where we are today as far as price. We're significantly lower in price, or Friday's action, right? Because it's the cash market, we're not open yet. So prices are lower, but the advanced decline is significantly higher, which means more stocks are up now than they were then, which means a few stocks that are cap weighted are lagging. But the majority, the rule of thumb is when there's a majority of stocks ruling the roost, okay, this is not a bearish, or at least you look for the market to have a little bit more strength. And that's what we were seeing, and that's why I posted that and made comment to that over here, because it was not the time or the end of the world for selling short in the hole, so to speak. When we go and look at the different typical planning and scanning session tradition, if we take a look at the Russell, which, I mean, most of you are pretty much aware that the Russell small cap is a, when you start looking at the Russell gaining leadership of the marketplace, it's kind of like a riskier trade than getting into blue chips. So generally, it's in fruitful times, in bullish times, that you see leadership coming into the Russell. The AD line just completely broke out to a new high. The futures just broke out to a new cash and to a new weekly and daily closing high on Friday, and so did the cash market. So we made a new weekly and daily closing high, and we did so on an increase with the breadth. Volume was pretty good too. It wasn't like we broke out with an insane amount of new volume. As you can see, this is the volume, on balance volume here, but volume is still healthy nonetheless. All right, so the Russell is one to watch, continued watch this week for leadership. Looking at the NASDAQ 100, where Apple rules, or used to rule, shall I say, we are, just keep in mind, we're coming into filling that gap that we left here from Ben Bernanke's, the day after Ben Bernanke spoke, okay? And we also saw with the NASDAQ 100, obviously Apple is nowhere near its highs, and as you can see, we are starting to see a breakout in the advanced decline here. We are nowhere near that June 19th pricing, June 18th pricing on the close, but we broke out on the AD line. So I've now shown you the S&P, the NASDAQ 100, the Russell, and we've all broken out. The diamonds, you know, all the Dow Jones Industrial Component stocks are in the S&P 500. They're just the bluest chip of blues, so to speak, or the best of the best with high-yield dividend stocks. And so when we take a look there, we say, well, it didn't break out, but certainly the AD line is up relative to where prices are compared to the last time. So if June 18th, this is where we are, right, on June 18th, yes, we are higher in advanced decline. So there's more stocks making positive gains. The one that's in question here is the NYSE, the New York Stock Exchange Composite Index. Now, this is a little troubling because a lot of people, this is the only indicator they can follow because like other educators and other trading rooms, no one really takes a breakdown of the advanced decline of each and every index, but we teach you that here. We share that with you. In fact, I felt it was so important that 2 years ago, it'll be almost, gosh, it's going to be 2.5 years soon. I had Genesis put it in their platform, and I didn't have it added on as an additional plug-in to the indicators. We just had Genesis put it in, and we've done, I'm sure there's recordings and classes that we've done with that sort of, and I think many of you already know how to find that specifically in the programming, if, of course, you have Genesis. So with that said, when we come back, and I'll share that probably through the week with you if you have questions on that, but I just want to go quickly and share with you the strength and the health of the market. Where is the leadership coming from? The leadership is coming from, it's hard to say where it's coming from because it's coming from everywhere, all right? NASDAQ Composite Index is moving up on a breakout with this AD line. The only question here is that volume. It didn't break out with tremendous volume. So we'll see what happens this morning. Right now, the S&Ps are up 7 at 1634, some nice little follow-through. Gold's actually up $17, and so there's a few things that we want to touch base with today, okay? Now, let's get rocking and rolling. All right, so I'm going to move the data window. All right, any question there? So if you had a feeling that the market might be overvalued here, and if we have an idea that we want to sell short here, we might want to be looking at the first test of resistance closer to your monthly resistance numbers. And so for the S&Ps, we're talking, and I'll type these in, ES, we've got 1645, first test. I'm talking first test now, okay, first test. 1645. Now, we go over here to my futures page real quick, and let's take a look at something real together. All right, so the high in the S&Ps, we got 1638. So that's, you know, 6.5, 6 3/4 handles away because it's actually 1645.75. Let's take a look at the NASDAQ. The NASDAQ R1 is 29.94, so we came close with the NASDAQ here, all right? Next, Russell is 1,000. Next, I want to talk about the Dow, because the Dow, the first resistance is 14,943, and then the bullish target was 15,070. I got news for you. We're well above 15,170. So for the Dow, you know, we've broken out of our monthly resistance targets that we have, and I think now we got to start looking at, like, as we see here on our screen, a little bit longer term stuff, which is around 15,244. So that's one of the target areas for the week we want to kind of follow, 15,244. 15,2 is up against, if we take a look at a weekly chart real quick together. So 15.2, we're not that far away. We're actually 70 handles away. 15.2 was where we closed up here at this time in price, right? That was on May 17th. We closed, as you can see, at 15.247. The next day we closed here at 15.239. We opened right there at 15.259. We had a high up there at 15.230. We had another high at 15.225. So as you can see, 15.2, let's call it a quarter to 15.250. That's going to be your first. Everyone, we're going to write that down too. Okay, so there's our next area. Now, typically the markets, the first test of resistance, offer a specific trade. Now, am I bullish enough to say we've got new highs coming into July? And the answer there is, I don't think so. And one of the reasons is because there was a lack of volume participation with the move, number one. And number two, this guy right over here, the New York Stock Exchange Composite Index, the 80 lines weren't all that great with this. We have leadership in the Russell. We have leadership a little bit in technology in the NASDAQ. And in the end of July, mid to the end of July, guess what we have? The worst time of the year to buy tech stocks. So this could be the flame out, so to speak, the last bastion, gasp of air, so to speak, that the tech sector brings in. So now let's move to our area of interest. And here is our little relative strength chart that we brought into you. How many people do you guys remember we talked about this? Was it now, how many weeks has it been that we talked about the KRE in this room? How many weeks ago was that in planning and scanning? It's been at least, I think, 2 weeks, right? Did you guys, I don't know, I know a lot of you weren't maybe interested in a lot of regional bank stocks, and I understand that because on any given year, bank stocks aren't the you know, the sexy flavor. People are interested in the high flyers, Priceline, Tesla Motors, you know, the ones that are moving all over the place, right? That's the high volatility ones for option traders. That's the one that people focus in on. But what I like to do, and I think this is an important life trading lesson, when we see, and it's not the losers. You don't buy losers sectors because they're cheap, okay? Losers are just losers. You buy the best of breed. You buy the ones that are moving and making significant strides. Those are the ones that the money will follow. Money follows money. Just remember that. Money follows money. So what we have here is since May 28th, the beginning of June, and so I'll go back and say since there it is, since June 4th, which was quite frankly that Tuesday, I mean more or less the beginning of June, without getting too precise. Everyone can kind of at least see that right there on the 19th, it was the day after the Fed speak, and even in the 20th, and then on the 24th, and I believe, if I'm not mistaken, it was the 22nd that you and I, or we all got together. It was someone right around in here that we talked that, look at this, man, this KRE is popping. Start spending time looking at these regional banks. Now, for a regional bank sector to go up, so this is a zero line histogram. This is 10% move for an index. That's insane. So that means a lot of individual stocks, because you get more leverage on an individual stock than you do an ETF. So now where is the next focus of leadership? We have consumer discretionary, XLY. Consumer discretionary is moving up. Look at the XLF. So the XLF is up. And remember, the XLF only it's a mixed bag ETF. It focuses, it has American Express, it has MetLife, it has, so it has banks, it has the CME, it has an insurer. It's a diversification. It's not a pure financial sector of banks, all right? So this week, a lot of stuff is pointing higher, except for this guy right here, which is materials, XLB. I mean, it's kind of just lingering. So the materials sector, man, that's got a little bit of problems. So materials is kind of an issue right now. So this week, I think, as you can see, the spiders right here is this black, big, thick black area. Some of the areas that I want to try to focus in on is transportation, because it's starting to make a little move, the IYT. IYT is a little hard to see. Let's try to pop it up for you so you can see this. So I'll move this out of the way. And we'll try to focus in on the last couple days to see who's starting to outperform. It's kind of like looking at a little like that game with the race horses, and you go to a casino, what horse is kind of beating who? And you know, you can still see this fuchsia, which is the consumer discretionary stocks, right? You can see this dark brown, which is energy, XLE. So perhaps we start with energy prices and crude oil trading. I mean, it's just amazing with the Middle East and of course everyone being a little concerned there. That makes sense. It definitely escaped my eyes, but we hit 104 in the overnight session. We're back to 102.45. I'm not sure if the refiners at buying crude oil and stocking up on crude oil are going to lose money on this gig, right? They're going to be really making some money. So the week right now, we have consumer discretionary. We obviously see the regional banks exploding. We see IYT, that's that red line right there. All right, transportation. That's kind of strange, don't you think? If energy costs keep going, how can transportation make money? But you have airlines, rails, trucking. So there's a lot of different sectors that are playing in here right now. Some of the laggards, of course, healthcare. You also have consumer staples way down here, this brown line right there. But they're all popping up, aren't they? So we're starting to see this like this color, XLE. We're starting to see it outperform technology. See the crossover last week? So we have a little bit of a crossover here occurring in the energy space. So energy is starting to move up. So focus, I think we've got some, for stock trades, I'm going to be scanning for some energy. We're going to be focusing, of course, on a little bit in transportation as well. Now, from a broader perspective of the economy, if banks are doing well, if transportation's doing well, so you have financial, and the only missing link of that would be technology. And some of the technology stocks are kind of lagging. So I just kind of wanted to share with you where the leadership of the market is coming from, and so we can kind of focus in on that this week and next week. Taking a look at the world, Latin America sucks. I mean, I don't have a professional term for it. So investing in emerging markets, not so good as well. The S&P 500 is actually leading the charge. France is out. Actually, it's kind of weird, but we're just going to move this up here. But this is a weekly perspective, and I just moved my zero line by accident. Malaysia, Germany, Italy, which is pretty weird. They're all kind of right in that same area, but it's the United States. Remember, all tides, rising tides lift all boats. But I think right now the S&Ps are starting to pick up, and we should see this week, we should probably see an uptick in Germany, and we should probably see an uptick in France and Italy as well. So keep that, we want to kind of like watch that, because if we see an uptick in the DAX, we see an uptick in some of these foreign stocks, it's more bullish. At least it'll keep you from getting heavily short. I think the message that I'm trying to say is that I'm not looking to sell significant rallies in the market, or shall I say, I'm not looking to sell S&Ps. If we test 1645, 1650 the first time, I'll sell it, but I don't think I'm looking for a lot out of the trade, especially if we're seeing these other names, France, Italy, Germany, Malaysia, start to uptick. So if we start to uptick here, that's telling me that we've got a different game. Keep in mind, we also have earnings season. Alcoa starts tonight, and earnings seasons will come out. And man, that might be a little bit of a catalyst that gets us up to seeing some stronger moves. Looking at the ES, once again, looking at the ES, we will be focusing on 60-minute signals. When the 60 minutes in a buy mode, man, I'm going to tell you right now, we're going to be focusing in on the 60-minute. I've been big on that, using the cash market, and in this environment, it's been pretty huge. Watching gaps, et cetera, So for binary shorter-term traders, I know Butch has his lines up. Butch is on vacation. I'm giving you more of a longer-term perspective, and showing you where the markets have gone and what's been happening. Looking at the energy complex, we finally see this little breakout. I mean, crude oil, the crack spread, I mean, it actually narrowed because there's not been that huge demand for gasoline. Even after the 4th of July, as I bring this in, I mean, look at gas prices in the futures. I mean, there's been a bigger demand, or at least a percentage move in from relative to old highs, right, in heating oil. Of course, crude oil has really significantly broken out. So the crack spread right here has actually significantly declined, showing that refiners, they're buying the crude. It's the demand of the gasoline that's not increasing. So, how do I play that? I play that by watching to see if, number one, we see finally a breakout in reformulated blend gasoline. That shows true demand out of the market. Another area that I look for is copper prices. Do we get a move in copper prices? So for me, I've got copper prices, crude oil, material sector. So we want to make sure that if the materials are weak, they're weak for a specific reason. And one of the reasons they're weak is the material sector is weak because no one's buying a lot of this raw goods. They're not building. How can that be positive for the economy? So we got a lot to focus in on. Number one, bond prices are lower. So that means people are coming out of bonds and they're anticipating further growth in the economy. Earnings season is coming up. We've got cheap prices in natural gas, cheap prices in copper, cheap prices in grains. I mean, soybeans are down, meats, et cetera, et cetera. So we really got to focus in a lot this week on different markets. And with this crude oil situation, this is the one area that does have a concern for me. From a seasonal perspective, this is now the time of year to be looking at gold. So with gold, the decline that we saw, that's another kind of like metals and mining, right? Gold, miners aren't making money. They don't need money for new equipment, machinery, so material sector. The seasonal trend in gold, by the way, this is the time frame where we bottom out this month. The commitment of traders report, man, speculators just bailed on this trade. They're no longer pretty much in this trade. The highest net long position was over here on September of 2012, and they are pretty much flat the market. They have not been this flat since somewhere in 1999, okay? So I kind of like gold in here, and we're going to be looking for bullish strategies. So that's where we're getting a lot of our, and that's the opening bell, 1633. That's where we're getting a lot of our weakness in the metals and the mining sector. But I like the metals and mining down in here. And I think there are some trades that we could look at through the week. Number one, personally, I like, and it's going to tell us that the opening bell is here. FCX. So all right. So FCX is playing off a basic potential double bottom longer term. The decline that we saw, if you take a look with me here, everyone can kind of see this, and I know we're in a little overtime here, but notice this decline in price did not come at the expense of heavy volume like we saw back down in here in April. So it's showing me that we are starting to form a base. We just don't have, and I think that's all you're going to see here, and this is FCX might be a great opportunity for credit put spreads and that type of area. But watch for, I mean, look at the volume in here, all right? So as the market gets sold off, they're not really selling it off on heavy volume. So watch FCX for daily buy signals. Let me take a look with the weekly for you real quick. We did form a quasi-doji hammer over here, not last week, the week before. So if we get a close on a weekly basis over that, you know, just to share with you here, a 20, let's call it 2780, all right, 2780 in FCX. I think that's a great play for the upside. And then, of course, one of the other areas that I like it better than most of the other metals in mining because of the volume, all right? The volume is the key there. And I just wanted to share with you Newmont. Newmont doesn't quite have the same pattern. It did make lower lows on price, and it did come on lower lows in volume. So Freeport-McMoRan is a little bit stronger relative to the other markets. So again, from that lesson of going with leadership and winners, I want to go with that sector. And just last but not least, to let you, the consumer discretionary and the retail space. I think that it's starting to lead, and any of these stocks, especially eBay, pullbacks, I don't know if we'll get them, but pullbacks near 52.60, watch for pullbacks around that 52.60 area, and you might have to go like 52.90, something like that. It seems like a lot, but I think it can be achieved. So if there's any questions, send them in, and we're going to start with our day trades outlook, and that concludes our planning and scanning. So metals and mining, Freeport-McMoRan is one sector to pay attention because we enter a seasonally strong period for gold. I think right now we've got to look for pullbacks coming into the banking sector and the regional banks. They're just way too strong. What I mean by and define way too strong is I come down to looking at the regional banks. MB Financial, I mean, when we talked about this over 2 weeks ago, from 25 to 29, that's a little rich, okay? FNB, Comerica, I mean, FNB, look, I mean, how do you get into a stock that was an $11 stock that's now almost a $13 stock, right? It's a bank stock. It's a big, big move. So in addition, looking at some of the bigger banks, even Wells Fargo, for example, got into the action, but not nearly as significant as those regionals. MT&B, I mean, this was, I mean, way back here when we talked about it, $104 stock, it's now $116 stock. SunTrust, I mean, the list, just the names go on and on. But that's not a bearish situation. So I just think you got to look for pullbacks in there, and you can't be buying it. Looking at the energy sector, I like the energy sector. So pay attention to the XLE. Even though crude oil is way up there, I mean, we're trading at 102.67 in crude. I think that your Schlumberger looking good. I think your oil service sector. If crude oil is big and you take a look at Schlumberger, we had a weekly buy. The only thing I'm not impressed with is that volume was a little light. So pullbacks, let's see if we get weekly pullbacks in here and then look for daily buy signals. Most of you know what we're looking for there. So other than that, that's all I have for planning and scanning. We'll look for Freeport-McMoRan, and we'll look for trade opportunities again. First test of resistance in the S&Ps, and look, pay attention to those 60-minute charts. They're gold mines. Thank you all. And that will conclude planning and scanning, and we'll be here with you in the room for most of the week.